Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, the S&P and the Qs had their best day in recent memory. As a matter of fact, the best day since all the way back here, November 24th. Yes, it's been a while that the S&P has put in a 1% day, if you can believe it. November and December were slightly soft, except for the end of November, which I'm referencing right now. After yesterday's abysmal day in the markets, which saw the S&P down 2% and the QQQs down over 2%, which in turn were the worst days since the infamous October 10th sell-off. But the playbook was kind of exactly the same. You might remember the October 10th sell-off was the China tariff threat. After China was restricting exports on critical minerals, the Trump administration put heavy tariff promises on the country overall, and thereafter throughout the weekend that situation was resolved with China lifting export restrictions on critical minerals. Of course, we're not going to talk about the Great Liberation Day of April 2025, just the most recent tariff events that we've had, and now we get another one. As you remember yesterday, the big piece of news over the course of the weekend was the Trump administration placing tariffs upon 8 different European Union nations in his quest to establish more of a U.S. presence in Greenland. Well, there were tons of news events today. It started off in the morning with President Trump speaking at a Davos conference in Switzerland. And while he was speaking in the early hours of the morning, the one thing that made the markets rally were his comments in saying that he would not use force to establish that presence in Greenland overall. And the markets really did enjoy that before tapering off a little bit here into the midday session around 12 p.m., 11:30. And what gave us the second leg of rally to the upside, guys? It was a very big one right here. This was your big news headline of the day. Trump saying he actually reached a Greenland deal framework with NATO backing off of said Europe tariffs overall. So different day, but arguably the exact same tariff playbook. Some people will call it negotiation skills. Some people will call it the infamous taco trade from Trump. Whatever you want to call it, as long as you can recognize similar patterns that occur, you can definitely follow the money and make money from it. And you know, if you are to look for this same pattern, whenever we get some very big volatility events like this, tariffs, negotiations and whatnot, well, you can be pretty sure, as we were saying yesterday evening in last night's video, that it is indeed a buy the dip opportunity to benefit from some of the volatility, benefit from some of the declines on some of your favorite names in the market, whose fundamentals, by the way, don't change overnight. That was the entire story of yesterday's video. So in today's video, we got a lot of stuff to recap together. Number one, of course, we'll be going through the major headlines of the day, recapping all the events that happened today in Davos, Switzerland, pertaining to the Greenland deal framework. We also got a couple other interesting news headlines that I have prepared for you guys. Thereafter, we don't have any earnings today. I mean, not that there wasn't any earnings today, but none that I found truly notable for us to cover. So today, we'll spend a lot more time on the price action. We'll dive right into the S&P, the Qs, and derive where we stand on some of these indexes, check on the market rotation, check on the market breadth, and where we could once again best position for the key themes of 2026. Thereafter, we will do the exact same thing, take a look at our big tech list. We got a lot of earnings coming up on big tech, so which of these companies could be some really attractive buy the dip opportunities into their respective earnings into the next few weeks? And at the very end of the video, of course, we'll go through everybody's favorite section, the biggest gainers and losers of the day, several names to the downside, several very interesting names, I might add, to the downside, which could be notable to you of interest if you're looking to perhaps position in some of these names. And of course, since it was a very big green day, we got many, many names to the upside as well. And we'll once again play the game of, is it too late to buy some of these names that had incredible rallies over the course of the day today? So it should be a very fun and interesting video, guys. Let us jump right into it, shall we? So the S&P up 1.15, the Q's up 1.35, and you can see a little bit more in the after hours. Heat map check, very solid heat map. Broad market performance yesterday was the complete opposite, right? Just a broad market bloodbath after the tariff news and the volatility news and the Japanese yield news on their 10 and 20, 30, 40-year bonds, as we were saying yesterday. So the complete opposite of yesterday, very broad-based, except, of course, for Microsoft and Oracle, which are a bit down. Sorry, my heat map just refreshed right there. Still a very broad day. Financials not having the best day overall. This is still a segment that I'm very interested and keen on playing in 2026. The banks on some of these pullbacks, the credit card companies especially. Healthcare having a very good day. Eli Lilly up 3.58%. And the bottom half of the market, not too bad either. Industrials, energy, and many other sectors coming back in a roaring fashion. Taking a look at the one-day relative. Oh, this one hasn't refreshed. This was yesterday, just to give you an idea, right? And here we have today. So the exact polar opposite, obviously, as a result of those favorable news headlines. Energy, top candidate to the top leader of the board right now. Once again, energy, probably one of my favorite sectors, whether it's renewables or oil and gas over the course of this year. We know the energy requirements for the scaling of the data centers in different areas of the infrastructure segment and segments of the grid, right? Very, very strong trade for this year, in my opinion, led closely by industrial, cyclicals, healthcare, and technology kind of in the middle of the batch right there. On the 1 week relative performance, you can see that communication services, technology, and consumer cyclicals are down, unfortunately. That's just because of these sectors. Well, the biggest components are big tech, right? And we know on a 1 week relative basis, even though today was fairly decent, I mean, take a look at big tech over the last 1 week, right? Here's consumer cyclical. It's largely only Amazon and Tesla. Here's communication services. It's largely Google and Meta. And here's technology. And all of the large mega cap names were down as well, which is why those three sectors are still printing red over the course of the past 1 week. Fear Green Index right now, still at neutral. You might remember last week we were kind of embarking into a greed territory, but now we've quickly snapped back to neutral as the market breadth has slightly cooled off. Speaking about that market breadth, we'll do a rapid little check real quick. Percentage of stocks above their 20-day EMA. Very healthy recovery from yesterday, but even yesterday wasn't too bad, right? Even yesterday at the lows, we were at 57%. Top end of the breadth range on your short-term indicator. Percentage of stocks above their 50-day EMA, the closely watched one from institutions, that is also now at 67% of all stocks above their 50-day EMA. Very healthy towards the top end of the range, and percentage of stocks above their long-term moving average, the 200, right? Arguably, when this comes down into here, you're kind of like in a bear market. It never really goes down there. You'll notice, the great tariff sell-off of Liberation Day 2025, and then you had the slight declines here in late October of 2023. With some inflation concerns, some banking concerns back then as well. But now we're sitting pretty right now at about 65% of all stocks above their 200-day EMA. And we referenced that yesterday, and we've been referencing this pretty much since the beginning of 2026 and even towards the end of 2025, all December. The story has been really the broadening out of the market and the fact that we really don't have to concentrate anymore into the former safety trade, which was largely big tech. The rest of the market is broadening out, and even on the 1 week relative, right? You can see that the rest of the market are arguably doing a lot better than big tech has been doing in the past few weeks of times. That's for sure. So before we get into more technical analysis, guys, let us go through the infamous news cycle for today. So as I was describing in the introduction, a couple different things this morning. It all started off very early with a massive arrow on the chart. My bad. It all started off with Trump's positioning, saying that he would not resort to any military action or trying to take Greenland with force. That being said, the markets had a nice little rally. We kind of gave a lot of it back. There wasn't many news headlines here other than the Danish foreign minister over the course of this hour right there. All he said is that there wasn't any framework reached for a Greenland agreement just yet. And so the market just gave back some bullish commentary from Trump during the morning. But then thereafter, I assume that Trump, well, not I assume, I mean, it's a fact, they spoke. Trump and members from the Danish delegation and several other members of the EU, because obviously they're all together there in Davos. They spoke thereafter, and then we got this, a framework of a potential deal, right? That's all you need to make the markets recover and to ease a bit of the pressure that we've been facing recently. Trump saying he reached a Greenland deal framework with NATO and backs off of the Europe tariffs. This was the big one. And in turn, Europe also backed off from backing off of the trade deal negotiations yesterday. You remember where I read you the headline that Europe was potentially considering backing off of some trade deal agreements that were made earlier last year? Well, Europe has now backed off. They're backing off. So there you go. So two sides to the coin as always. The highlights of the framework are as follow. It does involve small pockets of land for the US involved in Greenland's mineral rights. The duration of the deal has an indefinite timeline. It's designed to block Russian influence in Greenland, which was always the premise. U.S. Golden Dome system will also be involved for the defense of North America via Greenland and opens the door to U.S.-backed infrastructure investments as well. So as the summary says, Trump is looking to secure land, minerals, and defense in one deal, but that is always what he was going into these negotiations, hardball negotiations, I would agree, right? These were always the three things that they were kind of seeking. So we will have more information on this story as it develops, but these were the key highlights of the day today. Now, moving on to a few other key big highlights here. Because Davos is a summit for a lot of different tech companies and world leaders to come together, we got a lot of tech highlights out of Davos right now. Couple from Amazon. Amazon CEO Andy Jassy at Davos saying that demand is very real for AI and the capacity remains the gating factor for AWS growth. Now, if you paid attention to the last two earnings calls from Amazon, you would know this already, but nice to see Andy Jassy reiterating that the demand is still just too strong. And I mean, Amazon has earnings next week, so I would assume that we would have heard from that, heard from Andy Jassy pertaining to this issue next week, but at least we got it right away. Here's the quote: we're not just trying to guess whether there's demand. There is still not enough capacity. Even though it's gotten better than 18 months ago, we could still be growing faster if we had more capacity. So TSM has said this, many other big players have said this, NVIDIA has said this over the course of the past 2 months. The demand is just too strong, right? A lot of these hyperscalers are still constrained by capacity. Microsoft has said this, Google has said this, Amazon has said this, and they reiterate it right now. So the AI trade is very much still alive, despite your recent soft performance in big tech. A lot of these companies, guys, have massive amounts of demand and visibility, at least through the next 2 years. Moving on a little bit further here, Amazon with another headline, which really did some damage to HIMS stock today. And you might remember every time I bring up HIMS, at least when we do their earnings, this was always the risk that Amazon impedes into their business, which is something that Amazon does very well. Amazon's been doing telehealth and personalized health solutions for a while now, and also has similar competing products to anything you can find on the HIMS website, because let's be honest, HIMS really only offers generic products. Nothing is really patented of their own, right? You think of erectile dysfunction medicines or treatments rather, and hair loss solutions and things like that. A lot of this stuff, guys, has been out for like 20, 30 years at this point. They're just commodities. So he who has the best pricing power usually wins the game. HIMS is a very nice advertising company, and they are getting into a few other verticals as of right now, but this article did a lot of damage today. Amazon is rolling out Health AI for One Medical members, where an AI assistant built on Amazon Bedrock uses your medical records, labs, and meds. It can answer health questions, manage prescriptions, and book appointments, pushing Amazon deeper into this space now. So Amazon already had a solution such as HIMS. It's called One Medical, but now they are implementing an AI agent that is supposed to help you out. So this piece of news right here really did a lot of damage to HIMS stock and other competing products like that. HIMS was down 5% off that day. And I always say it, man. I said this about Trade Desk when we go over Trade Desk earnings every quarter. It's so tough when you're a company, when you have to compete with Amazon directly. They'll just push where it hurts, and their game is pushing pricing power to the absolute limit, limiting competition. I mean, call it capitalism, call it predatory practices, call it what you want. But what I call it is, I just don't really like playing companies that have to compete with Amazon in a face-to-face battle like this, because Amazon will always have the greater pricing power. So keep that in mind, especially if you are a HIMS investor. This is something that you will have to contend with more and more over the next coming quarters and next coming years. Doesn't mean that HIMS is not a good company that hasn't carved out their niche, but still, right? It's just something that we have to pay attention to. Just as if you're a Trade Desk investor, you have to pay attention to the fact that you are heavily competing with Amazon, and Amazon is crushing your margins right now. Moving on a little bit further here, President Trump at Davos saying the US is going heavy into nuclear energy. He spent a few moments talking about nuclear. We know that a big theme of this year is energy infrastructure, critical minerals, and just overall, well, as I just said it, right? Energy infrastructure. Nuclear is going to be very heavy, guys. And I keep bringing up statistics almost every single video to kind of paint the picture that there's just not enough supply for the amount of uranium that needs to be supplied for all these nuclear ventures that are being rekindled or have been rekindled over the past year and will be also pushed moving forward into the next 1, 2, 3 years. So the uranium sector, guys, pay attention to it. It's going to be a very hot trade, not just for 1 week, 1 month, or 1 quarter. Probably for the next 2, 3 years. We brought up some statistics, right? I mean, I could check my bookmarks just to kind of show you. I think we brought this one up yesterday. We brought it up last week as well. The forecast here, right, in terms of a supply shortage of uranium is very real, and it extends well into the 2030s, right? rekindling production of a uranium mine is not done overnight, right? 40% of the world's supply of uranium currently comes from a mine out of Kazakhstan. They're bringing production down, and now we have to start a bunch of new mines up again. I will remind you that traditionally, right, in terms of uranium producers, if you're looking for a bit more alpha here, uranium, the break-even price to produce at a profit for a lot of these companies is 60.5, meaning when it's kind of like oil, it's kind of like gold, right? When you're under a certain dollar amount, it doesn't make sense for you to run at maximum capacity. And that break-even price for most people in the uranium producer world is 60.5 price per pound for U3O8, right? Which is otherwise known as yellow cake uranium, right? So that being said, guys, we're now above the production price floor for a lot of these companies. They will be ramping up capacity, but it's not done with the snap of a finger, right? These things move slowly. So we are still very early in this trade, in my opinion, and we will bring up more and more names over the course of the next few days and weeks on the channel. We've already brought up many of them, right? There's different ways of playing this, whether you want to play some of the smaller cap names, whether you want to play some of the larger cap utilities providers like Constellation or Vistra or Next Era Energy or a bunch of plays like that, right? Moving on a little bit further here, listen to Jensen Huang. I think that this was pretty good here, talking about $500 billion manufacturing $500 billion worth of AI computing systems inside the United States of America. Take a listen to Jensen Huang. I mean, he's reiterated this, but he sounds very bullish in this video, at least for the next few years, which is why NVIDIA is still one of my favorite plays, despite its muted stock price performance in recent times, talking about the last month or two or three or four or five, actually, because NVIDIA hasn't really done much over the course of the past, 5 months, has it, right? We've just been basically stuck at these highs, but listen to the godfather of AI, right? Other people's words, not mine. Good old Jensen Huang.
Well, we've started in a very big way. Without President Trump and his strategies, we wouldn't be here today. And so I'm really grateful for all of his policies and encouraging Taiwan and TSMC to build here in the United States. In the next several years, over the course of the next 3 more years, we're going to manufacture approximately $500 billion worth of AI computing systems here in the United States. So it's just an incredible thing. The partnership with TSMC and Taiwan, it's great for Taiwan. It expands the Taiwan footprint into the United States. It's fantastic for them. It's, of course, incredible for the United States. Creates lots and lots of jobs. Now, the ecosystem and building up all of these fabs is probably going to take several years. Within a decade, there's no question we'll be in there.
There you go. There you have it. Reiterating basically what TSMC said when we covered their earnings just last week. The build out is very real. The demand is very real, and it will last several more years to come. Moving on a little bit further here in our news articles, Apple, with a bit of news of their own today, planning a big Siri reset with a full chatbot version in the second half of 2026 that Bloomberg says is codenamed Campos. The report says it will lean on Google's Gemini model. I'll remind you, Apple and Gemini, big partnership announced just last month, and Apple may even run it on Google Cloud TPUs in a deal worth about $1 billion per year. Bloomberg also saying that Apple is working on an AI wearable pin, which could be fun, and is targeting up to 20 million units for a 2027 launch. So maybe the comeback of Apple Intelligence is very real over the course of 2026, and you probably have Google to thank for that with this most recent partnership with Gemini, because Gemini's recent models have been extremely strong. Moving on a little bit further here, we got some news out of AMD, several parts. We talked about this yesterday a little bit. AMD up another 8% today after being up around 6% yesterday, right, before selling off a little bit. Yesterday, AMD had a very good day, but they got dragged down a little bit in the midst of the sell-off. They were up 6, and then they closed about up 2.5, something like that. And then today, pushing a little bit higher, another 8% to the upside. Very nice rally off the lows for AMD. Talked about 25% in just the last 5-6 days of trading. Why is that? Well, a few key factors right here. The rally followed analyst upgrades, with KeyBank noting hyperscalers grabbing all of AMD's server CPU capacity through 2026. And Bernstein raising its price target to $225 on strong EPYC sales and an OpenAI deal. AMD added Accenture's former CFO, KC McClure, to its board, bolstering its AI data center push. While Meta, this was the news yesterday, Meta ramps up purchases and the Instinct MI450 series looms for 2026. The Meta ramp was pretty considerable. Meta came out yesterday and said they're not going to go so heavily into their own TPU push, instead favoring AMD's new offerings in 2026 and 2027. So there you have it. AMD also probably going to be sold out through 2026 and even into 2027 as they embark onto their very nice ramp. And last but not least, we got some news, more news out of Davos today. This came out yesterday, but Alex Karp also spoke today. A big deal for Palantir. Palantir inks a new HD Hyundai deal worth hundreds of millions. This is the heavy industry portion of Hyundai, because no, they don't only manufacture cars. Hyundai does a tremendous amount of things, from elevators to ships to many different industrial purposes, right? So this is the heavy industrial version of Hyundai, or segment of their business. A deal worth hundreds of millions, and Alex Karp reiterating that he's very bullish on the Korea news. Overall, Alex Karp saying many bullish things about AI during Davos, but I'll let you guys tackle that on your own time. For now, we're just going to cover the main topic, which is the massive deal with Hyundai. I think that Palantir is going to bring us some very nice things in their earnings when they have them in just a few short weeks. So those were all of your news headlines for the day. Hopefully you guys enjoyed those. Now let's jump into some charts. All right, so walking into the S&P, well, I'll always remind you guys, technical analysis only matters if you put context behind the trade, and that's what I try to give you guys on the channel, context, right? So rising wedge broke bearish yesterday because of the news. Normally, when you see a back test of a rising wedge that broke bearish, you would expect a back test and then follow through to the downside, but the context matters a lot, right? If today was just a relief rally of short covering without any resolution to the framework of the deal with Greenland, well, you might expect some follow through to the downside, right? But now that we have resolution, well, it's very possible that the bulls are able to reclaim this area and just bank on key support areas back above the 50-day EMA and send us back to the highs. That, of course, is if the news cycle doesn't reverse tomorrow and members of the European Union say, no, wait, there is no deal on the table. It was all fake news, right? So obviously this is heavily news cycle dependent, but just here to make you understand the news cycle matters a tremendous amount. So just taking a short here based off a technical backtest without context, well, you might just end up underwater, right? But it's worth an attempt. If you do take that attempt, guys, your stop loss for a short will be above the all-time highs, because obviously that invalidates the entire pattern and breakdown altogether. Now, that being said, we are still at a lack of a daily uptrend, as we've just most recently lost the daily uptrend, right, with a flush of this low. So now the bulls have to work a little bit harder to kind of get that back, either the V shape to new all-time highs and reset it up there, or just do the two-step process of a reset like this. That being said, the weekly never really lost structure. As I'll remind you, right, we were always in a weekly uptrend on the S&P, looking very solid right there. We did not come close to the weekly higher lows. Sorry, let me just blow this up for you, because I know you guys don't watch these videos with binoculars and sometimes it's a bit too small. That being said, the weekly higher lows are right there, 672.34. So we have not lost the structure, riding the 12 EMA still. We will see if the bulls have it in the tank to actually send this one a bit higher. But we know the S&P has been a bit muted, right? It's been a story of the rest of the 493, and the Mag 7 has been left behind. And you can see the outperformance by your equal weighted SPY. The S&P was up 1.15, but look at your equal weighted SPY, up 1.7%. So once again, the rest of the market, clean breakout towards all-time highs. The S&P, not so much, because it's being held back by this guy right here, the QQQs. The QQQs, obviously, we're still in this tightening range pattern right now. Big tech really lagging behind, but I do believe the catalyst for them will be their upcoming earnings season in just the next 2 weeks of time. So pay attention to that. If we're looking at this one right now, well, we obviously had a tightening wedge on this one, not a rising wedge. This has always been a tightening wedge. And we tried to break it to the upside and go for some follow through. You got hit with the Greenland and Europe tariff situation, and now you got the overall breakdown. But we never lost support right here. 613 and a 604 is the target support range in the short term. On the weekly timeframes, we never really lost some of the weekly higher lows that we've been trying to establish during this tightening wedge, right? At least the lows of them, which would be 599, let's call it 600 round. You lose that, you lose the weekly uptrend, and then monthly consolidation is highly likely at that point. But so far, no go. I wouldn't expect, unless there's other big, tariff headlines or Greenland headlines or whatnot, we're not really expecting too much in terms of the capacity to break down here. I'll remind you, we don't have anything in terms of earnings for the rest of the week, maybe just Intel Thursday after the close, but that's not going to bring down the QQQs another 2 to 4% and crack those lows. And we also don't have much in terms of macro, right? You have PCE inflation numbers tomorrow, both for October and November. And then on Friday, you have manufacturing and services. I don't think they have the juice to drop the markets with that, especially because we know behind everything, inflation is not the bigger picture anymore. And you can take a look at the Trueflation Index. Look at this drop on Trueflation, guys, 1.42%. Consistent drops here since the month of December overall. And this measures 15 million different products and services on a daily basis, arguably a much better benchmark for inflation and much better basket representation than PCE or CPI or things of that nature. So please keep that in mind. That's why I don't think that even if PC comes in line or 0.1% harder than expected, I don't think that's going to be enough to move the markets. But we also get a Q3 annualized number for the finalized version of Q3. As we know, they put it out initially, start Q3, then they revise it twice, and then you get the final number. This is the final number. We'll still be expecting Q4, which will be coming out next month, right? And the expectations for Q4 are above 5% from Wall Street. So the boom in terms of GDP continues, obviously heavily bolstered by the AI trades. So keep that in mind, right? If we're looking for catalysts for further downside, well, you don't have anything truly crazy in terms of macro. You don't have anything truly market moving in terms of earnings. But next week, in the next 2 weeks, you get all the big tech earnings. There you have the catalysts for the big old breakdown, 2, 3, 4, 5% to the downside, or the break higher in the event that big tech earnings are quite bullish. I personally think, if you're looking for a bias from me, I personally think big tech earnings are going to be very bullish. And we can't also forget that many of these big tech names are down huge from their all-time highs already, right? Apple, we released their iPhone numbers yesterday. They should be fantastic. Apple's down 15%, right? It's going to be very tough for them to drop another 10% after earnings. Amazon has pulled back from its highs. It's not that far off its highs, but it is down 10% from the highs. I think they'll have a very strong quarter, especially with the headline I just read to you, right, in terms of the demand constraint or the supply constraints from Amazon right there. Google, well, Google has been trying its best to hold up the market, but I mean, Meta is down right now from its all-time highs, 23%. What are we looking for? An extra 10? Maybe if their earnings are really bad, but I'm not counting on that. Microsoft is currently down 20% from its highs. You know, it would be highly surprising. Nothing wrong with Microsoft right now, just normal price action and a rotation out of the Mag 7 into the rest of the market. Netflix is down almost 40% from its highs. They just had earnings, so no secret there. And NVIDIA doesn't report earnings for another month, right? So it's really going to be a question of Amazon, Apple, Amazon, Google, Meta, and Microsoft. And I really don't think there's any, and Tesla, of course, because Tesla has their say in the matter as well. And I really don't think we're expecting major declines from earnings. These companies should all have very good earnings because they gave us the guidance last quarter, and the guidance is very strong, right? So if we're looking for a breakdown factor for the QQQs, there might not be much until we get those big tech earnings. So keep that in mind. Once again, the context, when we're looking at the technicals, we want to find a reason how they can drop it there, because it doesn't just drop for no reason, right? You got to give people a reason to sell and panic sell and fast. Well, a lot of the cards were taken off the table today with the Greenland adjustments, right? So moving on to financials right now. Financials still a little bit soft here, not going to lie, right? But that being said, we did lose the daily uptrend. So daily uptrend like this, then you lost it, daily downtrend, and now we're into weekly consolidation into the bottom end of our support, which is 53.21. Lose that, you're going one level deeper right here, which is going to be 52 to 50. I don't think there's any chance that they crack this. This is the monthly higher low area, big previous resistance, months worth of support, and a lot of the banks have consolidated, right? We were looking for the back test here of the 12 EMA. JP Morgan is doing it. Bank of America is currently midway underway to that level as well. Wells Fargo is currently midway underway to that correction too. And then your credit card companies, Visa and MasterCard, they've already had most of their big volatile declines overall from the tops. So there may not be that much juice left in the tank to drop financials significantly more than a couple more percentage points, right? So this might just be our final resting location, looking for a monthly higher low possibly in the event that the financials weakness continues. But I'm willing to make an attempt to buy some of these banks at their 12 EMAs, or you guys know my stance already. Visa and MasterCard, in my opinion, are like no-brainer buys at these current levels. Moving on to healthcare right now. Healthcare with a very bullish, strong day overall. So this was a bit of a daily downtrend, but we never lost the weekly, right? The weekly is the cleanest time frame, in my opinion. It's just been a kind of a tightening range here on healthcare. Bit of an accumulation zone, bull flag, top end of the move, right? Consolidate like this at the top end of a move. It's one thing if you give it all back and consolidate down here. Then you can say it's a bear flag, right? Kind of like Bitcoin. Now, when you consolidate at the top end of a move and you don't give back more than roughly 35% of it, usually the bias still remains long and you're looking for the breakout. That's exactly what healthcare is looking for right now. You're looking for a break of former all-time highs. 159, 160 should do it. Healthcare still looking quite bullish overall. But let's say they fail and actually give us the big reversal, then the key area to watch is 150 down to 148 for the monthly backtest here, monthly downtrend, engulfing move, monthly higher lows, and then maybe expansion 2026. So keep that in mind. Semiconductors, 2.96% to the upside today. Very strong day of recovery as we did have some nice gains from AMD, some nice gains from NVIDIA as well, right? So take a look right there. A lot of players on the highs right here. And Intel up 11%. Intel's been a really big winner ever since that White House investment, right? All the way back kind of here type of thing, right? It's just been nothing but up, especially over the course of the start of the year so far. Intel year to date, I mean, they're crushing it. Year to date, they're already up 44%, and it's January 21st. Absolutely monstrous rally by Intel, but there's many names that are still at attractive locations. Marvell, in my opinion, is still attractive. NVIDIA, in my opinion, is still very attractive. AMD is like, you're pushing it. We gave the alpha back here saying, this is like time to position on AMD here through our structure 195 to 175. It's like last call for AMD right now. I don't like buying it up here. There were clear times to be buying it. So now is when I kind of pump the brakes. It's like last call for AMD right now, guys, in my humble opinion. But semiconductors having a good day and a broad-based day, that being said, right? So higher lows are now set. It's been a nice daily uptrend overall. Just watch your structure. Higher lows are there. If you lose it without new highs into tomorrow or wherever it's reason, right? Some tweet or some Europe news or whatever it might be, right? You never know. You're just looking for a weekly higher low. This was always the case. Previous resistance, current support. Very nice structure here on the weekly. And very nice rotation in between the sectors, right? Like Broadcom as well. I don't know why I didn't bring up Broadcom, my bad. But Broadcom from 330 down to roughly the lower 300s is a buy in my humble opinion, right? Looking for a monthly higher low. 12 EMA would be probably the best buy. But down here, not too bad. It does have short-term structural support for the past, I don't know, 4 or 5 months at this point since September. But if you do drop a level into the 200, that's best. So we'd be building positions into this little sweet spot right there. So tons of room in a lot of these semi names overall. Moving on to the Russell right now, we know that small caps have been the place to be, right? High momentum, high beta names as the market broadens out. It's been like a barbell broadening out, right? You're broadening out into cyclical areas. And cyclical doesn't necessarily mean like oil or things like that, right? No, we're talking about a broad cycle of the economy. Before, the safety trade was big tech because you had concerns surrounding inflation, concerns surrounding interest rates being too high for too long, concerns surrounding the restrictiveness of quantitative tightening. Those are all gone, and then we got massive fiscal stimulus policy. So the market is broadening out into certain areas of cyclicality that haven't been popular the last few years, right? Think of, namely, some of the consumer staples names, some consumer retail names, but also industrials are getting some loves, right? Defensives are getting some love. Energy is getting some love, and small cap growth also. So you're broadening out in terms of certain sectors that the big money doesn't position into unless you have a better macro landscape, a more clean macro landscape that arguably 2026 has more so than 2025 and 2024. Talking about these bullish catalysts. If you guys are recurring on the videos, you guys know this stuff already, but I know there's always a few new people that find my videos. By the way, welcome to the channel. Hope I'm not talking too fast for you, but it's all these bullish tailwinds, right? It's a much cleaner picture into 2026 than it was several points during 2025 with the constant concerns that these tariffs would reignite inflation, which they haven't so far. And now we got the $4 trillion in tax cuts. The AI megatrend is still strong. Earnings are going to be fantastic this year, in my opinion. Inflation is obviously not a factor anymore. It's just really the jobs market, right? That's all you got to pay attention to this year. Rate cuts and quantitative tightening. You got a new Fed chair coming in the month of May, who will probably accommodate the markets a little bit more. Even though all those decisions come down to a vote, it's not only the Fed chair. And then you also have very strong GDP. As I said, Q4 estimates are about 5%. So when you have all those bullish catalysts, right? That's why growth is finally breaking out. The reason that growth wasn't breaking out is that there was too many concerns previously, right? And now you remove a lot of those concerns and you give the markets a very bullish outlook for 2026 in terms of growth. Well, the small cap aspect of the market, the risk on aspect of the market comes alive even more. So there you go. That's why the Russell is up significantly. Daily uptrend looking fire. Yesterday was the new higher low. Pay attention to it. If you lose it without many net new highs, right? If they stop it here and flush, daily downtrend into weekly consolidation. That would be most people's concerns because the bulls control the uptrends right now. If you do pull back, pay attention to it. 248, 250 area, probably the backtest location for some of the growth names. And the monthly is gone. I'm not playing the Russell. It's okay. If you guys are playing the Russell, I'm playing individual small cap and mid cap names that I've talked about many times on the channel. So that's just me, right? Now that's it for our overall market rundown. We covered the rest of the sectors usually Monday and Friday. In this case, it was yesterday because Monday was closed, and Friday. So we'll do a quick recap of the rest of the broadening out trade on Friday. Now, moving on a little bit further here, the VIX, 16, right? It's come down to 16, 17. Huge decline today over the course of the VIX, and that's the nature of the headlines sometimes. You guys remember the China tariff headlines? It was up one day, carried through the rest of the next week, and then when there was some reversal on that policy, right, well, then the VIX kind of collapsed and was nowhere to be seen. This is the kind of tech/growth sell-off of end of October into mid-November. That's why the VIX rallied here. And now this was catalyst-induced. So when you remove the catalyst, obviously the VIX goes down. Can it come back up? Yeah, but you're going to need another catalyst, right? You're going to need the news from today to be erased, essentially. If not, the VIX will probably just resume its course, probably to the downside. And as I was saying yesterday, and even this morning, it was a phenomenal opportunity to be selling some options on maybe the put wheel, right? If you guys are selling puts, you got some really nice entry opportunities yesterday with all the red of the market. Hopefully you took advantage of it, right? I know it's not the easiest to do in the face of great uncertainty, but when we've seen this playbook time and time again, you might not know when it's going to stop, but you know it's probably going to be stopping. And you just got to focus on company fundamentals and your ideal locations, right? There is no amount of tariffs or noise in the markets that will prevent me from selling puts on Microsoft down here into a great range, right? And the same can be said about NVIDIA down here in the lower 170s, or the same can be said about SOFI down here in the mid 20s, right? That's just the level that I want. If I can get it with additional volatility, I don't really mind what the news headlines are saying overall, because that stuff is all temporary in nature, right? What will prevail are company fundamentals and buying companies at great locations. So keep that in mind. Moving on a little bit further here, we're going to talk about gold and silver. Obviously, gold and silver pulling back a little bit over the course of the Wednesday session. Even though Wednesday was a decent day for gold and silver, you did have a bit of a pullback here in the afternoon when that deal was announced, and now we're kind of moving incrementally lower. No structure has been lost, though, still in very nice uptrends. If we do move a bit lower, though, as the market rotates out of the safety trade, we know that gold has many faces, right? It's a central bank trade, it's an inflation trade, it's a de-dollarization trade. We can talk about all the many faces that gold has. But recently, in the past 2 days, the face that it adopted was an uncertainty hedge trade. So maybe if that unwinds a little bit, you'll be looking for a higher low. Anything above 45.35, maybe looking for this resistance high, 12 EMA. I mean, the bulls have done a good job of grinding this 12 EMA since November, right? So it's a very clear re-entry opportunity, possibly down here if you're looking for some swing trade longs with a stop there, and then you're targeting 5,000 expansion. Just keep in mind, though, guys, like we are overbought, which is why if you're trading, you should be trading with a stop loss, even if you're doing so with size or no size at all. Trade with a stop loss on the daily time frames, right? Because the last thing you want to do is get stuck into weekly consolidation or a larger monthly consolidation phase, which would be healthy for these metals, right? They got to consolidate eventually. Sometimes they do it sideways, like back here. Sometimes you get a more meaningful drop when you have very overbought conditions. By the way, this is the highest RSI in gold ever recorded. Like, ever recorded in the history of the asset, right? You can go all the way back here, even back to, 1969, maybe a slightly higher print right there. But okay, second highest RSI ever recorded on gold. I don't think these ones back here in the 1930s are too accurate, but just to say, right? Crazy the move the move that gold has done on the monthly so far. Just keep that in mind. You're buying it in the face of historically overbought conditions. It doesn't mean it's not a good trade. It just means that maybe you need to be a bit more careful than when that's not the case, right? On to silver, same concept. Silver, very nice uptrend control for the bulls right now. You're looking for a new daily higher low, anything above 86.70, looking for that higher low. In the event that silver gets a little bit reversed here, if the trade gets a little bit tired, as we can see the MACD slightly curling over, this was bearish divergence as well, so keep that in mind. So many things might indicate that the trade might be a little bit tired. That being said, if we do consolidate, well, you're just looking for a weekly higher low as well, and maybe the touch of the 12 EMA on the weekly as it curls up higher. Silver has done this many times over the course of this bull run over the past year and a half. So just pay attention to your levels and trade these things with a stop loss below your daily higher lows, because the last thing that you want to sit in is buying the top and then sitting through weekly consolidation and then just crossing your fingers that it can possibly come back, right? That's not always fun. Moving on to other things such as Bitcoin and crypto. Well, Bitcoin and crypto had a little bit of a recovery day after the disaster that was the last 4 or 5 days of trade, but no swing trades right now, right? You got to wait for the bulls to reset the time frames. When we had the daily uptrend shifts right here, it's very easy to position here with the stop loss below there and look for follow through. Or if you missed that one and you're looking for daily legs, right? You're buying these dips into this area, and then we can position a stop loss once again below here, and then target the expansion. Now there's no daily uptrend, so it's very tough. I mean, you just if you're swing trading this one, you kind of just got to buy and cross your fingers and close your eyes and hope it's okay, but you're definitely not doing anything with time frame confirmations, right? So Bitcoin still not doing much of anything, still weekly consolidation, still no weekly uptrend. And as a result, still no monthly momentum, unfortunately, on crypto. And the same thing can be said about Ethereum as well. No daily uptrends, loss of the daily uptrends, right? So no trend there. They got to get it back. It's still into weekly support, which is this big green box, but still no weekly uptrends, right? No breaks of the highs and closes of the highs here, and still just monthly consolidation in very soft assets that just haven't been doing much of anything over the course of the past 3-4 months. So Bitcoin and Ethereum, the best you can do is long form accumulation, but we do not have the triggers for any short-term swing trades with size, at least not in my opinion. That's everything for your overall market rundown. Now, let's get into big tech. So first off, for big tech, moving into good old Apple. We talked about it a little bit in the introduction and the news cycle, but just to reiterate, right? Apple daily oversold conditions right now, 15% from the highs into the 200-day EMA. So clean daily downturn right here. You will have to wait for confirmation of the time frame reversal to indicate that the weekly higher lows are set. And maybe we're done this phase of weekly consolidation, which at the end of the day is just looking for a big old monthly higher low into the 12. This is the little pocket that I've been looking for Apple, right? Between this whole, call it 245 down to about 225 area. This is a nice clean buying opportunity for Apple if you believe in the company and you think they'll have a good 2026, which they should if their iPhone 17 sales gauge has been accurate over the past quarter. They should be having a very good year. So although Apple is slightly overvalued right now, I do not think they will be left behind forever. Right now, Apple is currently down year to date by about 9%. So I would be heavily surprised if it underperforms the S&P this year. And as a result, since it is in a nice monthly upswing right now, I want to be making the most of these dips if we are to build any further positions on Apple overall. So keep that in mind. Moving on to AMD right now. So AMD up 8% overall. As I'm saying, it's kind of last call for AMD right here. Not that the valuation is stretched by any stretch of the imagination, at 230 where it just was. Now it's about 10% higher. You just add 10% of this PEG ratio, right? Now it's like a 1.1 PEG and it's like a 9 forward price to sales, which is not terrible. They're growing revenue and EPS super fast. We know the demand is sold out. We know that they're into the big boom cycle, essentially, right? If you take a look at AMD right here, massive EPS expansion, massive revenue expansion, but you still want to be sure that you're coming in to your compound annual growth rates accurately, right? So this is always why there's like a best time to buy AMD, and then there's just an okay time to buy AMD. This is like an okay time to be buying AMD. This was best recently. Obviously, best was all the way back here, but we're not getting those prices. In terms of recently, best was back here. If you missed it, well, you can contemplate possibly buying and DCAing down if you get further distractions in the market, which would bring this one down again. But I think they're going to have a very bullish earnings release Tuesday, February the 3rd overall. So keep that in mind. Trying to reset the timeframes right here. Nice engulfing move. And we're encountering some of the previous all-time high resistance. So looking for a higher low on any further distractions. Maybe down here again, right? 220, 225, back test and possibly run. Maybe that's last call for entries. Hopefully you guys are able to accumulate a little bit at the lower 200 range. When we were saying on the channel, it was a screaming deal. Nice weekly uptrend reset right now attempt by the bulls overall. And we were always looking for a monthly higher low, which is why I put so much emphasis on these monthly timeframes. So you understand who's in control of the larger trend and why I put so much focus on the fundamentals as well, right? When you control the higher timeframe trend and when you are also fundamentally relatively cheap, the bias does remain long. As a result, these sell-offs can be temporary in nature and are also buying opportunities. Moving on to Amazon right now. Amazon only 0.13% to the upside, unfortunately giving back all of their recent gains. It seems as though every time Amazon has a breakout, something happens, right? They had great earnings, and then we got the tech unwind of late October into early November. We had the breakout again, then we got the Greenland tariff Europe situation overall, so coming back down, but we didn't really lose support yet. 240 down to about 225 is the range, 240 down to about 230, let's call it, right? A couple dollars here, a couple dollars there, as long as you guys know what the area is, right? Huge prior resistance, and now still support. So the bulls are still looking like they want to maintain this weekly uptrend. And the monthly has just always been an area of nice consolidation for the past, 3, 4, 5 months at this point in time. You guys know the drill. Amazon is still a buy for me, 230 down to the mid teens, right? 230 down to 215-ish, 210 is the sweet spot for accumulation because eventually, in my opinion at least, eventually it's just not going to give re-entries anymore. Eventually, Amazon will have its time in the sun, and I do believe that this year is probably going to be the start of that overall. At 235, you're looking at a under 30 forward PE ratio and a 1.5 peg, so keep all of that in mind. Moving on to Google right now. Google still very strong, right? Google up 2% on the day. No loss of the daily uptrend, still hunting for a higher low, anything above 311, looking for that higher low. So the bulls are still in control, right? But is it the optimal area to be buying Google right now? Well, we've been saying this for a while, right? And the answer is unfortunately no. It's weekly overbought conditions. It's monthly overbought conditions too. And the valuation is somewhat at the top end of Google's historical range. When you're so far extended, it's just tough to build positions with size. I understand shorter term swing trades, but just launching huge size positions up here when Google is at 4 trillion, maybe not the best risk to reward in the market. That being said, am I selling any of my long-term shares? No, but if I had trading shares accumulating from down here and wanted to reposition some of these gains into maybe other Mag 7 names that have not rallied as much, that is a decent proposition. And that is what, I kind of did with some of my call options that we sold in the mid 200s and then reallocated to other names that were down. Moving on to Meta right now. Meta up 1.46% today. Not the best day for Meta. Well, I mean, it was a decent day, right? But still, the price action structure is very weak. We'll just have to look to earnings next week to see if we can kind of get a nice little pop and get the daily uptrend back, because now the daily bears are in full control. We are into a large support area on the monthly, which is this guy right here, 605. Down about 556. Valuation of Meta around 630 or lower is very cheap, right? Low 20s forward price to earnings and a 1.63 peg. But the market knows that, right? The market knows that. The reason that it stays cheap is because what the market doesn't know is what is Meta doing with all of this CapEx? A few weeks ago, they released that they were going to work on new cloud endeavors, right? In terms of hosting cloud for other corporations. Previously, they didn't say that. They were supposedly going to use it all for themselves and training their own in-house model, but you don't really hear people talking about the Llama model, do you? People talk about Gemini all the time. People talk about OpenAI as ChatGPT, right? People talk about Claude, but nobody really talks about Llama 3 and Llama 4, right? So that being said, maybe we'll get some structure and some guidance from Mark Zuckerberg, because what's been bringing the stock down is this expense profile, right? The street just can't wrap its head around why Meta is spending all this money and where will the efficiency gains come from. There have been some efficiency gains in their advertising structure so far, yeah, but does it warrant like $70 billion of CapEx for only the advertising gains? Well, probably not. So there has to be another use case behind this, and only then will you refine probably some longer term bullish structure. So this is what's been bogging Meta down. Still a buying opportunity, in my opinion. Very good company and at very nice, attractive valuations as well. Moving on to Microsoft right now. Microsoft down 2.25%. They had a bit of an outage today, which, Microsoft didn't start off the day on a great foot, although it was down, 0.3, 0.4%. Just continuation of the downtrend overall. Very soft momentum by Microsoft, fully in favor of the bears, right? And then what really kind of drove them a lot lower today was the fact that they had a outage on their 365 suite of products. So sadly, Microsoft down again. However, now it's really juicy, guys, super juicy. 20% off the highs. You can go back historically and you guys tell me, whenever Microsoft is down 20% from any highs, whether it's during the tariffs of last year, even when it's during the big old bear market of 2022, right? You can go back in previous historical standards. This was COVID, that was 20+%. 2018 tariffs, this was 17, 18%. Whenever you find Microsoft off 20% from the highs, long-term moving averages such as the 12 and 26 EMA, and daily oversold conditions, and the fact that it's definitely not a fundamental problem. We had their earnings were great. They gave great guidance. Around 440 right now, 27 forward multiple, right? And a 1.55 peg. Whenever you find Microsoft at these historical locations with a ton of confluence, resistance, support, and kind of the stars align, it tends to be a very good purchase. It doesn't mean that's going to go up instantaneously. Matter of fact, I've been saying it's been a good purchase since the low 470s, saying this is the accumulation range between the 12 and 26. Well, now we're there, right? So it is still an accumulation range. And, there will come a point in time where, just as it was up here, where Microsoft will no longer be a buy for me. Here it's a buy if and when we rally. Probably a question of when, not if. When we come back all the way up here, Microsoft will no longer be a buy for me. So there are times to buy these things and times not to. And I do believe that this is a decent time, not financial advice, for me to be buying Microsoft. So keep that in mind. Moving on to Netflix right now. We covered their earnings yesterday on the channel. If you didn't see them, their earnings are pretty good. They missed on a few key metrics, but subscribers are going up. Advertising revenue dollars are going up. And Of course, the black cloud overhang above Netflix right now is the Warner Brothers deal. So until that deal gets solved, well, Netflix stock price may just be muted. It doesn't mean it's just going to perpetually go down. I mean, we are daily oversold conditions right now into the last line of defense support, which consequently are your April tariff lows. Insane how much Netflix has come down from the lows right there. Here, it was like the best company in the world, the most immune company to tariffs. And since then, after a sequence of just natural consolidation, then exacerbated by last quarterly earnings with the $620 million Brazilian tax hike or tax hit that the company never really recovered from, and then the Warner Brothers $80 billion deal, it just never recovered since then, right? However, Netflix is a very strong company. I like it. They are at the forefront of the streaming wars right now. Daily oversold, weekly oversold conditions, and very low on the monthly as well. It is a buying opportunity, but as I was saying in yesterday's video, do not expect Netflix to run anywhere quickly, right? Because until they resolve the deal with Warner Brothers Discovery, right? Are they going to get the deal? Are they not? Is Paramount going to get it right? How much are they going to pay? Et cetera, et cetera, et cetera, right? So narrative, once again, sentiment. And the narrative on this stock is just too strong to warrant a snapback instant recovery. Moving on to NVIDIA right now. NVIDIA up 2.95%, but still not doing too much. We never really changed the price action structure at all. Still in support right now, 185 to 178. This is like the magnet area because it's just been here so many times, either as resistance, then as support, as resistance, as support. But whenever we see NVIDIA come down into this area, we always say it's a nice area to either build some more shares or possibly sell some put options down here for some nice premium. And yesterday was no different overall. There's no problem with NVIDIA whatsoever, just price consolidation for the last 5-6 months at this current time. Around 175, low 180s. It's a very low forward multiple, trading at a 423 PE and a 1 peg. So NVIDIA right now is arguably very, very cheap in relation to its forward growth prospects. And on the monthly, we've just been consolidating, right? So this entire lower end of this consolidation range, call it where we are right now, all the way down to about 165, 170. This is the accumulation range for some potential longs, right? Keep that in mind. Moving on to Tesla. Tesla was up 3% today. Not too bad at all. So that being said, right, daily, continuing on the daily downtrend sequence right here, 430 down about 415 is the area of support. Tesla has just been not very favorable, as a lot of big tech names haven't been since the end of December there, where a lot of them has just come down, but Tesla hasn't really broken high time frame structure. The weekly downtrend engulfing move, still looking for a weekly higher low. Hopefully they find it here at support. Hopefully they can have a good earnings release and give us some guidance on FSD, robotics, the energy business, which should do very well over the next 2 years as well. If they give really good guidance on that, you guys know Elon is a big fan of giving very lofty guidance targets and then having to slightly push them back into the future. And I can say that because I'm a Tesla shareholder, so I get it, right? Now, that being said, no loss of major structure on the weekly and no loss of major structure on the monthly. Still monthly sideways with a slight bearish tilt consolidation. Best area for Tesla, 407 down to 381. 12 EMA back test, previous resistance, support. I'm not saying it's going to go down there. I'm just saying if it does get down there, that's best. Moving on to Palantir right now. Palantir down. Was down at 3.5% today, recovering a little bit, but we did lose some short-term structure, right? Daily, now sadly a downtrend, which means weekly, further consolidation phase 2, right? Just follow through to the downside. So we will see if Palantir is going to go down here and challenge 150 to about 145, which is the next big reaction zone. Let's be honest, it's the monthly 12 EMA. Now, in the past few months, Palantir has done wonders in terms of cooling down its monthly RSI. We will still have to wait for more earnings to get the valuation down around the same price though. But Palantir, if it does come down there, 150 to 140 could be an interesting area to possibly play if we're looking for some swing trade longs. If they can reset price action out of here, then we get a nice tradable location down there. It's a monthly level and it is a key area of support for the stock overall. So keep that in mind. I'm still very bullish on Palantir. I'm not really adding any shares up here, but I am still holding a couple shares of Palantir. I still own about 3 shares of Palantir. No, I'm just kidding. A couple hundred shares of Palantir. But still, moving on to SOFI right now. SOFI, 0.6% to the upside today, but still no change of price action structure. Same concept, right? Daily downtrend. You got a nice area of support down here, 25 all the way down to about 22.5. That being said, key area, right? SOFI's been doing nothing, unfortunately. Just sideways accumulation, right? Some ups, some downs, but still within the confines of above resistance, 28 to 30, and below support. I love this support area, guys. prior highs from 2021. Very solid fundamentals below 27 as well. Well, now it's closer to a 1 peg because it's down 10% from 27 and a mid-7s price to sales. Now it's probably closer to 7 because the price is 25. So this is the accumulation range. If you're a SOFI bull or you want to take some SOFI longs, this would indeed be the SOFI accumulation range. Not financial advice, but this is where I've been playing it, right? Short puts under here, and if I'm looking to accumulate any shares, it's probably where I want to do it. Moving on to the two last ones here, Uber and then TSM, then we'll do the biggest gainers and losers. Uber, not much price action structure change either, right? Still just looking for a daily high or low, anything above 79.56. Looking for continuation and a second attempt into the great wall of resistance, which is this whole area above us right there, 91 at about 87. That being said, the weekly bears still in control of this chart, and as a result, monthly still in the form of monthly consolidation. So many names in monthly consolidation, anywhere from big tech names to names like Uber, right? But all have similar structures. We're all in the context of monthly uptrends with nice support pullbacks or pullback into nice support levels overall with decent valuations. And Uber is no different, which is why low 80s is an area that I enjoy playing. It's a forward low multiple, 23 roughly at 80, 1.43 peg, and a 5.25 free cash flow yield with very strong earnings in terms of bookings growth, monthly active users growth, mobility, and deliveries growth as well. Last but not least, Taiwan Semiconductor. They had fantastic earnings, which we covered last week on the channel. If you didn't see that, definitely go check them out. Super solid. A lot of visibility, right? The best thing about TSM's earnings is not their pricing power for this year. It's not the demand for this year. No, it's the raise of guidance through 2028. For a company to have that amount of visibility for that amount of years into the future tells you something, that the AI trade is definitely very much alive. And as a result, we should probably be still positioned in some of our favorite AI names if we want to play the narrative, right? I know some of you just don't want to play the narrative, and that's fine. But if you are playing the narrative, then you would appreciate the visibility that TSM gave us. As we're looking at right now, right, short-term price action is a little bit choppy. If you do go for the full retracement, guys, when in doubt, zoom out. Where are we going? Probably back here, 310 out of 302. Previous resistance, current support. Weekly, just looking for a weekly higher low, maybe to continue the uptrend overall. And the valuation, which we did derive after earnings, you know, at 340, it's manageable, right? TSM is a little bit of a nibble up here. It's either a nibble or a hold. It's not a full send buy as it was in times prior, such as down here, but it's not a sell for me. This one is a hold. There's no reason for me to sell. High moat, high competitive advantages, right? Very strong player. There is always the risk of the, the China narrative, right? With Taiwan, but that's a given. If you're invested in this stock, you just kind of have to absorb that and determine whether or not it's worth your risk. But this is an area that I would be looking to play if I were looking for any swing trade longs with a bit more structure. And that is everything for your overall market rundown. Hopefully you guys enjoyed. Now let's get into everybody's favorite section and play a little bit of, well, biggest gainers and losers, but also like, is it too late? We don't do that when the names are red, right? But the names that keep printing upsides will say, is it too late for Intel, for SanDisk, for Lemonade, things of that nature, right? So let's play that game again today. Let's get into it. Okay, so let's cover some of the names here that were the biggest losers of the day. Now, Credo, very solid name, extremely strong revenue expansion profile right here, around where we are. Sorry, I don't have the price right now, but this is around the lows. I last did it around the lows right here, 130, 140 down about 125-ish. A decent in terms of a forward peg, but just keep in mind, price to sales is a little bit rich. Not if you look all the way out to 2028, but usually you shouldn't really do that. You look at forward this 1 year price of sales. It is nice monthly higher lows though, right? Monthly higher lows, that's a terrible line. Monthly higher lows, let me just zoom it in because now it's all squished up, right? Looking for the monthly higher lows here around the 12 EMA. And then it's been a very nice area of weekly support building since the month of September. So this could be a nice area to accumulate. I'm playing a little bit of a swing trade here on Credo. We actually got it back here. We kind of round tripped a little bit right there, but it should be having a nice possible forward rally of momentum. Obviously, if you lose that support structure, the trade is invalidated, and then you might just be looking a little bit lower, sadly, towards the $100 mark. But for now, the stock is looking pretty good. ASTS and some of the space names. Well, they were down pretty big today, but all good things have to have eventually a big pullback. We know that ASTS has been a very big winner here, guys, over the short the short January season that we've had so far, right? It only, from the bottom to the top, that was 72% in the month of January alone, right? So super strong move. You're looking for the daily higher lows. Is it too late for ASTS? Well, that depends on your time frame. We say this all the time, right? Is it too late for short-term swing trades? Definitely. If you're buying up here, it is very greedy, right? If you're buying it here at $38 billion, well, here's your time frame, right? When can we justify that revenue? Okay. Well, in 2028, they'll be doing $2 billion. So they're trading effectively at almost 20 times 2028 price to sales, right? Does that make sense? It doesn't really make sense unless you have a very long time horizon, right? If you have a very long time horizon, the next 5 years, well, then maybe you might think that this is a cheap area. For everybody else in between, well, maybe the easy money is not there anymore, right? The easy money was here. We talked about ASTS down there off of their big monthly back tests, right? Monthly 12 EMA back test. It was the same thing on Rocket Lab. Down here, we talked about it. And now you're through the bulk of that trade move, right? So buying up here is very greedy. So I would not be buying these pullbacks if I have a short-term time horizon, right? It's just very tough to make money. The easy money has been made. This is hard money. You're just basically buying and praying you're just not too late, praying that you can offload your short-term shares to somebody else. Very bullish narratives into the longer-term future, but there's always a great entry point and a not-so-great entry point, and these are not so great entry points, right? Moving on a little bit further down the list right here, Reddit for me is not a bad opportunity down here, but you got to give me 180, 170. I know I'm a stickler for price, guys. I've always been that way, so don't blame me for it, right? 182 back to the 12 EMA right there, and the valuations down there in the mid 180s are pretty good. I mean, not that they're bad here at 210. We did them after earnings last time, and they did show that they were pretty good in terms of the forward peg, but keep in mind this EPS growth rate will not last forever. So this peg is artificially low because this growth rate will be coming down. Price to sales is at 13, which is why I want a little bit of margin of safety here. Give me an extra 10, 15% off, and maybe I can nibble a little bit at the monthly 12 EMA, where we have the bottom of the November move as well. But Reddit, definitely something that I am watching closely into the forthcoming weeks in the event it somehow gets dragged down a little bit more. Moving on to KTOS right now. So KTOS, and I guess we can throw in AVAV up here, right? Some of the high-flying, mid-cap, right? Defense names for drones and things of that nature. Well, KTOS, is it too late? KTOS arguably is starting to get a little bit too late here, guys, right? You're talking about a company that's trading for $20 billion right now. In terms of forward visibility, what do we have? Well, even if you go out to 2028 earnings, it's $2 billion. 2027 earnings are also $2 billion. It's trading at 10 times forward 2027 sales. Not egregiously expensive, as we saw on other names, but you also cannot say that this one is very cheap. Now, they do have their place in time, but we did say that Kratos was a buyback here in the month of December. Why? Because they gave you the infamous monthly pullback to the 12 EMA. Let's say it was the same thing for NBIS and IRN. All this stuff, guys, is just the same trade over and over and over. You just wait for some of these super high-flying names to pull back into their monthly moving averages, and then you hit them. If you miss them, and then the first time you see them thereafter is all the way up here, or when everybody's talking about them, when they're up literally in the month of January, bottom to top, 72% in 21 days, does it really make sense to chase up here? Probably not, right? So, but I know FOMO is a heck of a drug, right? And it's tough to get over, but there's so many other plays in the market. There's so many other plays, right? In terms of various different things that you can play. Even Ondas. Ondas is like another FOMO-inducing name. I mean, you just wait for a little bit of a pullback, right? No sense in buying up here at 15 when it's super hot, right? If you just waited a couple extra days, you got your little pullback, at least to short-term weekly structure down here, closer to the $10 range. Selling some puts down here or just patiently waiting for it to come back and pick you up. OSS was another very popular name that came up, as recently as a few weeks ago. That one's up huge. So not a fan of chasing these, but when they pull back, for a considerable fashion, then maybe you can kind of warrant the entry. Or if you're, because these are a bit different, right? This company is only a $280 million company. That's different. But if something's already 20 billion, you know what I mean? The capacity for it to 2x to 40 billion is less than if you just buy something here after a run that's still 286 million. Like this can go to $1 billion, and it's not that hard for it to do, right? OSS has revenues on a forward basis. I mean, it makes a little bit of, a little bit of sense. Going out to 2027 here, you're not fully at 10 times forward price of sales for 2027. Kratos is. So there's like different, you see, like I'm taking you guys through this stuff fast. I go through this stuff in detail with our Discord members, right? So bit of a shameless pitch down there. If you guys wanted to join us in the group, the link's down below. I'll say more about it at the end, but there's ways to frame these trades, You know what I mean? And I'm just here to help you guys frame these trades overall. Speaking about AAPL, AAPL is a bit touchy right now. They had news headlines come out the other day to the effect that there's a short report. I'll let you guys read it on your own. I've kind of glanced over it briefly. I still have to kind of deep dive it to see if there's some merit to it. Anyways, there's some money laundering, money funneling allegations for one of their very large Chinese clients, which supposedly funnels money through Cambodian subsidiaries, which was one of the big reasons for AAPL's growth over the past few years. And anyways, it's a very detailed short report. There may be some merit to it, but it's definitely a bit of a black cloud overhang for AAPL right now. Not that AAPL was cheap to begin with up there where it was in the 620s to begin with, right? It was a 1.06 peg, but with 40% EPS growth. You know that this EPS growth rate will be slowing down. So price to sales is more fitting sometimes when you see there's an asymmetric EPS growth rate right there, right? The PEG ratio can induce you into error. So you always double check price to sales. And I mean, 2028 forward price to sales, you're not supposed to go all the way out there to justify valuation, but it's 26 for this year, 27. That's like, you know, Palantir numbers style, right? And 17 for 2028. So it's not cheap. You know what I mean? So when you add something that's not cheap to begin with, and then you throw on a short report, it's like, do I really want to participate? The answer for me is no. Like, if you're going to throw that, well, you got to give me a bigger discount. So I don't know, maybe I can talk about this one if it comes down to 400. If it doesn't come down to 400, well, I just can play other names on this list, can't I? There's like 200 stocks on this list, you know, some of which don't have that problem. It's a very solid company, but most of the easy money on AAPL has already been made. It's a $180 billion company. What are we going to do here? Buy it at 530 and expect it to go to $1,000 over the course of the next 6 months? Possibly not, right? It's already expensive and it's already a large cap stock. So see how I'm framing these trades? That's why I don't have to go through every single one of these names. If I just give you guys how I frame a lot of these trades and the thesis and the trading levels that I'm interested in, well, you can go through some of these individually for whatever you're interested in and kind of try to apply the same logic if my logic makes sense to you in the first place. Maybe you just don't enjoy the style with which I, approach these charts, and that's perfectly fine, right? There's not one way to trade these names. This is just the way that I do it, right? So TMDX for me is a name that I don't talk about too much, but it is a name that I've been building a position. $4 billion company, organ transplant business, solid proven business model in North America. They will be expanding into the liver market, which is the biggest organ transplantation market on the planet. And they will be expanding into Europe as well after proving their markets in North America. So it's been a bit of a dog here over the course of the past, let's call it 4, 5, 6 months. Price action is not that bad, guys, right? Still a monthly uptrend, a little bit slow here, but a lot of room for expansion on the market cap into the next few years. So it's a medical equipment play, right? And I know it's one not for everybody. I don't really hold many medical plays in my portfolios. As a matter of fact, I really only have 2 right now. I have TMDX, and I built the position on ISRG last year for the very first time. They're the only 2 ones that I actually hold, right? So TMDX is just mine. Maybe you want to look into it if that's something that you want. TE Energy, this is also one of my favorite plays coming into the next, 1-2 years overall in terms of risk to reward on this name, in my opinion. So if TE Energy somehow pulls back here, 6 to 5 for most people that provide a good entry, still a good entry in my opinion in relation to where it can possibly go. I'll let you guys do your own due diligence, but you're looking at a $2 billion market cap company. See, these are the styles of plays that I like. You find something at a low market cap and look at the revenue projections, right? This year, $1 billion. It's a $2 billion market cap. That's a 2 forward price of sales. Margin of safety there is pretty good, right? Even at $8. Now, you might look at this chart and say, oh no, it's ran so much. I could have bought back here. Well, just look at the fundamentals and ask yourself, does it still make sense to build a position here? And the answer indeed is yes. And then you would DCA if ever it comes down there. But as long as the valuation still makes sense after big moves like this, I'm a fan. When the valuation, you have to stretch the valuation. You have to stretch your imagination for the valuation. That's when things don't make sense anymore. And that's when we stop buying at highs, right? It's okay to average up on things, you know what I mean? So long as those things still have a huge possible ramp ahead of them in terms of multiple expansion, right? It's a 2 price to sales. So keep that in mind. Moving on to the other further narratives here, some of the critical minerals plays down a little bit today, obviously because of the Greenland news over the course of the day. Just some of them pulling back from recent rallies, of course, right? So that being said, this one, quadruple U's, USAR are all kind of the same thing. CRML was down a lot today because that one heavily relies on mineral exploration in Greenland overall, things of that nature. So, you know, you can talk about UAMY as well, United States Antimony Corporation, which is very solid, a very solid play as well. Critical minerals is definitely the place to be, but you don't have to play them individually if you don't know much about them. I'll let you guys do your own research. I don't have time to cover, you know, 5 different theses on 5 different critical mineral stocks today, at least, right? However, right, there are different ETFs that can allow you to benefit from some of the critical minerals play. One of them is SETM, while the other one is METL, right? There's many different plays out there that you can choose in terms of ETFs, or just when you look at these ETFs, just look at some of their holdings and then derive some possible attractive plays from within, right? So those are some of the key themes and names. We already talked about HIMS earlier with the Amazon news as well. We're not going to talk about it again. Shopify, we talked about it yesterday. Shopify for me is a bit of an add or build a position down here into the under 130 down to 120 location. I think it's a nice breakout retest here on the monthly time frame. Shopify does trade a little bit rich, I will admit. We say that every time, right? So it's a bit of a nibble, right? It's not cheap per se, and it's also not a small market cap company. So you kind of got to build into it if Shopify is your style of play. Call it 130 down to like the 100 area is where I would be interested in kind of building a longer form Shopify position. Very strong company, very strong growth metrics, very strong ecosystem overall too. AVAV is a position that actually started today. I was waiting for a big pullback off of that. That being said, I did get a nice little entry today around the 310 location, and I'm willing to be a bit more patient to complete the position size if we fall into the 200 range, but you're just looking for a weekly recapture here of the lower level. So I'll be building the position from here downwards, as this one still does make some sense at 15 billion in terms of a forward market cap. If you take a look at forward price to sales, it's not egregious, right? If we go out to, well, this year it's 2.3, next year is about 2.7. So that's not terrible, right? When I take the market cap, like 15.6, where I bought it, 15.6, right? Divided by, let's take 2027 sales, want to go out that far, 2.68, right? That's not terrible. It's a 6, under 6 forward price of sales. That's not terrible. Once again, right? If that said 20, well, I'd probably be like, well, I kind of missed it, right? I'm not really attractive, but it's a 7, or it's under 6 rather, right? For 2027. So still possibly some nice upside, and only a $15, $16 billion company. This is a very popular name. I don't talk about it that much, but I figured I should let you guys know since it is one of my newer positions on the board right here. And the rest, I think we really talked about most of this stuff already, either today or in previous videos. Taking a quick glance at some of the names to the upside, right? Intel, we can play. Is it too late on Intel? Well, some people would say yes. Some people would say no, to be honest with you. If you take a look at the valuation right here from $40, it's up 35% the last time we did this valuation. So just add 35% to these, right? So 0.82 times 1.35, not terrible in terms of price to earnings growth, but then again, EPS is coming off of 0. So this EPS growth rate will not last forever. Price to sales though, 3.3 times 1.35 expansion, right? You're at a 4.54 price to sales for this year. Not that bad. Semiconductor industry trades in the teens, low teens is the industry average. So Intel, you can make an argument that Intel is somewhat cheap here, but once again, it's a multi-year thesis, and you should be willing to DCA in the event it comes down. I was very vocal on the fact that Intel, the last time it was a very good buy, was like down here in the 35 era. If you didn't catch it after the initial White House deal here, then the next few times were into support for the infamous backtest of all the EMAs, right? Infamous backtest here, huge level, and now it's kind of gone, right? So there's a next structural level that we can pay attention to, which is these guys right there, yeah? So here, down maybe through 45, 43 area, could be the DCA add, but this, once again, is a longer-term thesis. Takes a while to turn around the company, but at least you have the support of the federal government, right? So they won't let this one fall behind, and you obviously will have some pressure from the administration to companies like such as Apple and NVIDIA so far, which will be utilizing Intel services as much as possible to help them ramp up their foundry business overall. So those are the thoughts on Intel. It can be very interesting, but if you're buying up here, you should be buying with a longer term thesis, instead of quick gains, because the quick gains have been made. It doesn't mean that more quick gains haven't been made, but the easy gains have been made, right? Now you actually have to come into this one with a bit of a thesis to justify the price up here, even though it is cheap, right? You do have to have a decent fundamental thesis, whereas before you could just kind of take a bit of a gamble either in the low 20s or here and say, all right, well, it's still very cheap, and the White House deal is fairly fresh and new. So that being said, that's it. SanDisk and Micron. I mean, we're going to talk about these. We don't talk about these this often, but SanDisk and Micron, guys, I talked about this today with my Discord members. This is literally the epitome, kind of like silver as well, where you know there's a shortage. You're not too sure how much it's going to last. You know that this stuff is heavily cyclical. I can compare it to silver, right? It has all the same symptoms, right? Something that's highly cyclical, something that's highly dependent on a current market shortage that you're not quite sure how long it's going to last. Obviously, that's where kind of the similarities stop, right? But conceptually, the underlying themes of the trade are the same, right? So that being said, SanDisk and Micron, are they still buys? Micron up here at 385, right? It's trading at a 4 to 12 PE, and it's not coming down off of a huge EPS number. No, this is still objectively cheap. It's a 12 forward price to earnings. It's a 0.4 peg, which is just ridiculous. And even up here at 385, it's a 6 forward price to sales. By all accounts and by all measures, Micron is cheap, but it also breaks the mold, right? You look at this chart and you keep thinking like, how can I possibly buy Micron up here? And the conclusion is that if you look at this chart, you can't. If you just blindly trust the fundamentals, but we understand like you don't know how long the memory shortage is actually going to last. It's going to last. The projections are that it lasts, the pricing power like this lasts through 2027, but you see there's a taper off here into 28 and 2029. Is that because there'll be finally enough supply in the markets that these companies will run out of pricing power and run out of the demand crunch? Possibly. Is there more meat left on this trade? Possibly as well. This is literally a you hover over the position in your brokerage account, you derive a certain amount of cash that you're willing to allocate to the trade, and you just buy and you tell yourself, well, listen, it's a generational run. I want to participate. I know that I'm very late on the technicals, right? Institutions just have been buying. They don't allow reentries, or they haven't allowed many reentries at all, right? They just keep buying any and all dips because the shortage is very real. And we covered this after earnings. We were saying, listen, like if you're a fan of Micron, like you just kind of have to go for it here after earnings, right? Into the earnings, because that was the best consolidation that you had for a while. If not, it was just straight vertical. And here we go again, straight vertical, just like silver, right? So this is one that you can get behind the valuation, and it pains me to say this because it breaks every technical rule in the book, right? But as I've been saying about the rest of the trades in this list, when the fundamentals still make sense, if you're top blasting, you can justify with the fundamentals and with the theme at play right here. I still believe that Micron here, it's crazy to say, right? Crazy to hear the words come out of my mouth. It can run more. No, this is not me drinking the Kool-Aid. No, this is not me having FOMO. It's just evaluation. It allows for more expansion. If Micron up here was trading at a 100 forward price to earnings and a 5, 6, 7 peg like Palantir and a 25, 30 forward price to sales, then I would say like there's no way I can touch this, right? But here, the craziest thing is that you can actually make an argument for this company and SanDisk as well, which is ludicrous to say, right? But these companies can rally more. So the only thing you can do at this point, if you've missed all areas of relevant consolidation, SanDisk is already up year to date, guys, 104%, which is just absolutely ridiculous, right? Micron year to date since the start of January, since that December 31st low, is up 37%. It pains me to say, but there is probably more money to be made on these trades overall, right? But the way that you should do it is it's impossible to position up here with size. At this point in time, it really is, right? The easy money has been made. Now you're looking for kind of like the second half or the conclusion of the trade, meaning that there's probably no more 3-4Xs from the lows, right? As you were buying Micron down here, you know, at the $100 range, or you're possibly, some of you guys might have been buying SanDisk down here, you know, last October at 120, right? Like the 3-4X in rapid times are finished. Can you maybe squeeze another 2X? Who knows? Crazy things happen. Another 3X out of these stocks over the next year and a half during the memory shortage? Maybe, but you know that you're not buying at the most optimal price. And if there's some big tariff event or a black swan that hits the markets, well, yeah, these names are going to come down 30% in a very rapid fashion. You know what I mean? So keep that in mind, right? I'm not telling you guys to buy here, but also if you guys are big fans of playing momentum and you just say, you know what, I'm going to take the risk, I'm just going to go for it. Well, that's completely up to you, right? You can justify it with the valuations. That's all I'm here to say. Whereas you can't justify the valuations on some other names. Now, taking a look at a name like Lemonade, and this is probably the last one we're going to cover, guys, because we've covered a lot of themes so far. You guys know my stance on a lot of this stuff already, right? So just taking a look at Lemonade. Lemonade is not one that I talk about a lot, but they had a big deal today with Tesla, saying that they would, for people that use FSD, they're going to start charging lower insurance rates while you drive FSD. So Lemonade is a very interesting play, right? Arguably, I mean, the easiest money of them all has been made buying down here, buying down here, but there is still some meat on this trade. The only problem with Lemonade is that they're not profitable and they won't be profitable for probably the next 6 to 8 quarters at this point in time. But at a $6 billion market cap, you can justify buys up here. Obviously, we're not getting the best discounts, but this would be a buy and DCA. Right? A buy and DCA. If you do best for Lemonade is clearly down here 60 to 55, but you're not too sure if you're going to get it. But the question is it a buy here at 85? Can we justify it? You can justify it versus forward sales for this year or for 2027. It's either trading at a 6 price to sales or moving forward, 2027, it's trading at a, 4 price to sales roughly, between 4.5. You can justify it. We can't use EPS because EPS is negative. Right? They've been making some improvements in free cash flow. They've been getting a lot of customers. Their customer growth is very strong, right? It's a nice play. I will admit it's a very nice play. I would not mind taking this one myself. No, you're not getting the best entry. Sorry for not talking about it too much in the 70s where it would have been marginally better, or back here in the 50s and 60s. I know that some of you guys would have wanted me to talk more about it, but there's only so much time in these videos, right? So yes, it is a buy. It looks really good for the next few years for a multi-year thesis. But yes, it is also a DCA trade. If it comes down there because of any news or because of any market crashes, know that it's not the end of Lemonade. This would indeed be a buy the dip opportunity to DCA with some possible shares. And I think that will probably wrap it up for the biggest gainers and losers of the day. We've covered many themes, many segments, and we've covered the context and how I frame my overall trades, right? So I've been doing a lot of, 15, I always say 5-10 minutes. I should keep it to 5-10 minutes, but I always do like 10, 15, 20-minute segments for the biggest gainers and losers of the day, guys. Eventually, it pains me to say, but I will cut down on these a lot, and just because the videos get really long, and I know I'm going to try to make the videos closer to an hour or less. An hour 20 is, I know you guys enjoy it. A lot of you guys do, but I got to cut down on it slightly just for time efficiencies for me as well. And then obviously, if you guys, we do a lot of these deep dives and other things of that nature and framing different trades and you guys asking me, hey, is this a trade and why or what level? No. We do a lot more of that stuff in the Discord. So if you guys enjoy my style of presenting these things, right, you can always join us in our community. That being said, if you enjoyed today's video, that's all I had for you. Consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these every Monday to Friday after the close to recap the day's events. And last but not least, if you have any questions and comments, please feel free to leave them down below. Always love hearing from you guys. And just to kind of conclude on our trading and investing community, right? If you were tired of trading and investing in the markets all by yourself and you wanted to do so as part of a group that trades the markets every day and looks for these investments and analyzes a lot of these names. I know I don't talk about them a lot, right? But we do talk a whole lot about all of these key themes for any given year, whether small cap, mid cap, right? Whether the minerals trades or the AI trades or any of the other trades that you can possibly see in some of my videos, right? We deep dive these, right? We derive potential price targets, potential entries, how to best utilize options for them. So we do a lot of discussions during the live streams. But speaking about the Discord, well, of course, you get access to all of our discussions and live streams, but you also get access to all of my trades in real time, right? So whenever you see me taking wheel trades or directional trades or whatnot, things of that nature, right? Here's just a lot of our trades that we've been making over the past couple of months and type of thing, right? So a lot of wheel trades, just farm premium, and then we deploy those premiums into leap call options, swing trades with call debit spreads, or, asymmetric bet longs on some small cap names or mid cap names, key themes as well. So whatever you guys see me do or talk about in my portfolios, I'll always give you guys the trade alerts in real time. You also get access to our private morning live streams where we have a lot of these discussions. I trade the markets live and then answer all of your questions on your stocks, your options, your long-term portfolios. but I go through a lot more of these names in real time that we do at the end of these videos every single day for hours in our live streams. So it's a very good learning experience. If you guys enjoy my style, you can also ask me your questions all throughout the day in our chat rooms. You get access to our video educational section where I have 15 hours of content of how to build a long-term portfolio, a trading account, various trading styles and strategies like the debit spreads I use, the leaps I use, various wheel trading strategies. So much educational content in there that I will never put on YouTube. It's only for our community members. And last but not least, whenever you guys see any fundamental breakdowns on my charts, such as support resistance areas for the technicals, or you guys see fundamental breakdowns like I do for a lot of earnings here, or just other companies, that we do cover on the channel. Hundreds of companies have technical annotations or this. You guys can copy paste all my watch lists and all of my charts. It takes literally 15, 20 seconds and they are all yours. Just a few benefits of the Discord. So if you're interested in joining us, then the link to join us is down below in the video description. Hopefully I get to see a few more of you guys in there soon with us. And if not, I'll see you right back here on the channel. That's it for me. Have a great rest of your evening. I'll see you guys tomorrow after the close. Have a good one. Peace.